I think that, first off, just to take a step back, my view might diverge from some about what's actually happening in the economy. Even though it is a tight labor market, stock market's near record highs, I think that all of that actually covers up the lived experience of most working Americans. 10% of Americans capturing the vast majority of these gains in the stock market. Everybody else, they're making the same amount that they made in 1978. Median wages still have not budged. And what's more, the cost of living, healthcare, housing, education, all up and to the right. And so people are feeling squeezed. And a lot of people in New York or San Francisco are like, the economy's great. That's actually just not true for the vast majority of Americans. So there's a new plan out today by Senator Kamala Harris, which is accompanying several in the House too, to actually repeal the Trump tax bill and give all of those savings to working people in the form of a tax credit that comes every month, up to $500 per month, for not just for the working poor, but also for the middle class. I think that if we did that, it would give a boost to the pockets of the people who deserve it most. It would rebalance the economy, and it would actually create the kind of growth that I think all of us want to see.
When you say repeal, you mean repeal the corporate tax cuts or repeal the individual?
Or both?
Both, specifically on those who earn $100,000 or more. I mean, the question to me is not necessarily how and which of the tax cuts do we repeal. If it were up to me, I'd repeal the whole thing. I think it's, do we actually create tax cuts for working people, or do we create it for the 1% and the rich? And what we see, the effect of this tax bill is the highest buyback rates, which I think are problematic. It's not investing in R&D. It's not investing in the kinds of things that we want to see to sustain long-term growth. And what we know is that consumer spending is what drives the economy. If we were to invest in the American people, we would see economic growth, and it would help people actually make ends meet.
Let me ask you a question. You look at the current economic growth that is happening, which is real. You can argue it's sugar high. You can argue lots of things, but it is happening. Do you believe that's a function of the tax cuts? And so is there a way to think about tax cuts? Maybe perhaps, and we were talking about it earlier, actually, this idea of corporate tax. Maybe you could leave the corporate tax cuts where they are, but maybe the issue in terms of trying to raise revenue might be on the individual in a different way?
Sure. I mean, listen, there's no doubt the macro numbers tell us that the economy is growing and that the stock market is high.
And you want people at work,
but
right?
The question
there's a dignity to work.
Of course.
And so the idea that we can put people in the labor market even under some of these circumstances.
Right. But it all depends on your perspective. If you look from a studio in Manhattan and you look at the GDP numbers and the macro numbers, it all looks great. If you're a working person at Walmart in Topeka, Kansas, or just down the street in the Bronx, you are not making more money than you did decades ago.
We're starting to see some wage gains, though. After 8 years of nothing, we're starting to see some now.
You're seeing 3% higher now than in 1978.
Right, so far.
It is so far. It's modest. Well, they've been telling us this has been coming and coming and coming.
But
and the
Walmart
point
in
is, all of that is
over.
All of that is overwhelmed by the cost of housing up, the cost of healthcare, the cost of higher education, the cost of student debt. These things are not
I'm sorry,
in line.
just looking at Walmart, because you brought that out as a particular example. Walmart several years ago decided to raise rates. A couple of years ago, they were one of the first to do that. You've now got
minimum
Amazon
wage.
raising their own
minimum
wages above the national minimum wage.
Absolutely, and we should.
Amazon is too.
And we should applaud that. That is really remarkable. There have been some things with Amazon recently where at the same time they pulled back some of the investments of some of the managers, which gave me a little bit of pause after the fact. But I think it should be applauded when the companies take on responsibility. However, I don't think we should sit around and wait for companies to be good Samaritans or good citizens. The federal minimum wage is still $7.25 an hour. That needs to change because there are people all across this country who are working nearly full-time and still living in poverty.
The endless argument that we're never, and I'm never going to convince me, you're never going to convince me, okay. I'll never convince you, is that there's two ways of approaching economic growth. And one is to tax the producers and then take that money and redistribute it to everyone else. The other way that people decide to maybe do it is don't tax the producers more, allow them to do what they do, risk capital, start companies, create jobs. You have more jobs, and then people are able to move between jobs where they make more money, and you do it organically. Minimum wages go up, not because the government says make it $8 or $9, but because the company suddenly, to keep good workers, has to pay $15 an hour.
That's the theory. Yeah, we just.
But we're seeing it happen. We tried redistribution for 8 years. We got nowhere. We got zero interest rates. We got assets went up in value because the Fed stayed at zero, so everybody that was in stocks made more money. and no one at the bottom got anything,
Listen,
even with the redistribution.
I think I found somewhere where we where we agree.
Which is?
Which is redistribution. I think we do a ton of redistribution right now. We just redistribute up. Right now, my taxes as a member of that infamous 1% are lower than most of the taxes in America. That is a tax code that we have designed to move money up to the people who own capital and not to the people who I believe deserve it because they're out there working every single day, the kinds of hours that I would never be able personally to manage. So I agree that redistribution is happening in the United States. I just think it's happening.
I mean, we are always going to be a meritocracy. There always are going to be, you know, people like you that made $500 million, and there's going to be people that never in their wildest dreams can make a $500 million. So that's a great way to do it. You wouldn't want to take that opportunity away.
Yeah, but I would argue that my story is exactly what tricks people because it looks like, because I did grow up in a middle-class family in North Carolina, did go to Harvard, I did become part of the Facebook founding team, did make a boatload of money. However, I made that money for 3 years worth of work. And I am the first to say that that is anything but a long career of hard working. That's a lucky break.
I was going to ask you about it.
And that is not because, and my story, it may be unique and extreme, but it's not that uncommon. There are lucky breaks happening every day for people who are part of the 1%.
All of us have had some lucky breaks.
I think so, and I think we should
where
change
you're
the rules
born,
of the
everything
economy
else.
to make that less
when
likely.
you talk about, you know, fair taxation and people need to pay their fair share. So you work for 3 years, you've got $500 million. If a wealth tax were proposed for you at 90%, you'd still have $50 million. You give $450 to the government, not philanthropic. But is that fair? It seems fair to me if you have $50 million left.
Well, sure. I think we should look. I think that wealth tax should be part of the conversation about
a
how
90% wealth tax.
90% would be aggressive.
You'd still have $50 million.
Listen,
nobody can spend $50 million.
Right. You can pick up these straw mans of all kinds of policies, but that doesn't knock down the underlying logic.
What's fair, though?
Income inequality is at the most extreme point in the United States. It's been 100 years. That doesn't mean a wealth tax of 90%. Sure. Okay.
Okay, but we do have we have a pretty progressive system right now.
Oh, I would disagree.
You don't think we have?
No, I think that we should bring our marginal rates back to where they were for most of the second half of the 20th century, up to 50% on income above $250,000. That I'm sure you think is extreme. I think that's reasonable. I think it's most importantly what we had when we had the most robust growth in economic history and growth that was widely shared. That is shared prosperity, and that's the kind of country I want to live in.